So today's macro picture, who owns your thoughts? If you thought it was you, it might be you. I don't know. I don't know who I'm talking to here. You might think you have an edge on how your mind absorbs information. But my point I'm going to make today is take a look at what you're reading. When you're going through a magazine or a newspaper or any of those things, even a book attempts to cross-sell certain products throughout it. Look at who's sponsoring this stuff. Like, who's sponsoring the articles? Who's sponsoring the magazine? Who's sponsoring the book? What are they trying to cross-sell? So I have a subscription to Money magazine, and somebody bought this for me because they know that I have a strong interest in financial and the history of money and economics and all this fun stuff. The only reason I've kept this actual subscription is because when you open this magazine and you read what's in it, it basically tells you what not to do. Meaning, if you read an article in this magazine and it tells you to do something, don't do it. And it works out pretty well. So, well, first I wanted to point out this this ad here. As you can see, it's an old man standing on the side of the road taking a piss, and it's an ad for some kind of I pee my pants too much pills for old people. But what I really wanted to point out is there's no silver in this magazine. At least I couldn't find any, just browsing through it real quick. So there's an article in here about investments to avoid in 2011. As you can see right here, what to avoid. Gold. Let's fast forward to a section here, the young and the riskless. This article basically says that investors under 35 as a whole, and these are people, have decent, jobs, made a lot of money in their 20s, and have portfolios by the time they're, 30, 35. This lady supposedly is holding 80% cash, 20% stocks. No mention of any metals. This nice little family right here is supposedly holding 85% cash, 15% stocks. This adoring little family here and their little baby, only 29 and 30 years old, holding 60% cash, 30% stocks, 10% bonds. Now let's get to the third section of this periodical article here. In scary times like these, investors seeking certainty grab up more gold. But once the crisis wanes, will the shine wear off? And if you forward to this section right here, and it's in big bold text, it says, gold in times of financial stability is hazardous to investor health. Because we are in booming times right now. It's wonderful times. You shouldn't be in gold. It's horrible investment. Let's see if I can get enough. See if I can even, I can't believe people read this stuff and believe it. It has the Warren Buffett quote in here where it says, the thing about gold is if you're right, then you're a jerk. Even if it works, you're a jerk. That's the exact text coming out of this paragraph here. And then it also says at the end of this article, it says, if you want to take a real risk, implying that gold is a real risk, why don't you take $3 and buy a call option on gold? If it's a 10-bagger, you made $30. But if you're wrong, you lose $3. That's their suggestion if you want to take a big risk. And they're telling you to do that on GLD, by the way. And this is the same article that's talking about 25 to 35-year-old people that have portfolios that are scared to put their money in the markets. I wonder why they're scared to put money in the markets. Think Money Magazine is, helping the situation at all? They read here an article about how they are hoarding dollars, and all it tells them to do is buy a $3 call option on GLD. So I don't even know how to put words into that. So let's read the headlines here. Bad economic news may not earn you much, and good news could crush you. What market are they looking at? I'm at a loss of words here. I can't even. This article is so bad. Sure, the dollar has its problems, but just look at the other guys. Wait. The dollar has its problems, but look at the other guys. So other countries whose, comparable dollar or fiat currency, which is backed by dollars, well, yeah, of course. Why, if I'm bearish on the dollar, why would I invest in currency that's backed by dollars? Duh. And point number 3, the gold boom has the earmarks of a speculator's rally. So you damn speculators out there, stop buying gold, because we can't be wrong in Money Magazine. Can't be wrong. Stood out. I know there was something else in here that was just hilarious. Here's another quote. Here's another quote in big bold text. The greater fool theory is not a convincing argument for buying gold. I'd agree with that one. Good job, Money Magazine. Now they have this article here in this magazine. It's called How Well Do You Know Risk? And it has like a picture of an airplane and a train and a car. And it says, do you feel safer, A, flying, B, driving hundreds of miles to the same place, or C, taking the train? Now instantly I said flying, because flying is the safest way to travel. But here's the first sentence of the answer. As Superman once said to Lois Lane after rescuing her from a helicopter crash, I certainly hope this little incident isn't putting you off from flying. And that's implying that everybody that reads this answers driving, which is the most riskiest way to travel. Now, I can find all kinds of things in this magazine where they ask questions and I don't answer what they're assuming I'm going to answer, which is why this is the best. This should be called Contrarian Magazine. All I need to do, read the articles in this magazine and do the opposite, and you will be a success. So I'm really debating on whether or not I'm going to renew this. They've sent me like 16 renewal notices, and every time I get a new one, it's like 50% cheaper. So I'm waiting. This is, I swear this is the 6th last magazine that I've gotten. I swear I've been getting this for like 2 years, and I only had a subscription for like 1. To renew it, it's $10 for 12 issues. Now, just to mail this to me, it's got to be at least like 55 cents. And then it's printed on really nice paper, which, I mean, the production of this has to be more than 45 cents, meaning that in order to maintain the subscription of $10, I don't understand how they make money selling this. Oh, the advertising. And the advertising, I forgot about the advertising. When you look at the ads that are in the magazine, so if I do pay $10 for this magazine, I am supporting Big Pharmacy, MetLife. Make sure you got your insurance going. Open an account today. Make sure you got lots of credit cards. Because, you can't have credit cards if you have gold. There's an Ameritrade ad. T. Rowe Price. Get your Roth IRAs. Goldman Sachs Asset Management. So if you would like to spend $10 on this magazine, please support Goldman Sachs. So since Goldman Sachs is sponsoring this magazine, do they have anything to do with the gold article? Maybe. The magazine is supported by the ads that are in the magazine. Otherwise, they wouldn't be able to charge me $10 for a subscription that probably costs $15 to mail to me. So look for the ads that are in the magazine. You can see what the underlying message is. The underlying message: finance your sound system. 12 easy payments. You can have a surround sound stereo in your house for free. And then you can get these cool headphones for almost nothing. Good deal. It's a great deal. I'm gonna buy today. Another car ad. Let's go to the serious ads. The serious ads in the back. What do we got? Car ads. Ooh. 2011 Silver American Eagles. Only $29.88. Free shipping.